All right. What is up, everyone? Welcome. My name is Elton, like Elton John. Welcome to another real estate wholesaling analysis meetup event. If you're joining us from the meetup.com or anywhere else, welcome to another episode. This is episode 14, I believe, that we're already at. And let's get started with some analyzing into real estate wholesaling. Again, my name is Elton. I've been wholesaling for about 8 to 9 months already. Transitioned to becoming an investor, out of state investor, looking into some properties as a buy and hold. But a little before that, I used to work in sales, used to be a manager at a local gym. And I used to actually learn a little about real estate wholesaling during the pandemic. So everything was video stores, and it just that's the time where a lot of people were just at home. Some people, not everybody, well, majority of the country was in the world. But I took that time to also learn about real estate wholesaling and kind of like slowly adapt into it. And about 8 or 9 months ago, I finally took the initiative to jump into it just because it was a really good opportunity for me to start getting into real estate. And that opened doors to a lot of things in terms of like real estate. So if you're a beginner, it doesn't matter where you are right now. Just continue figuring it out, learning and expanding from there. But as just like me, I'm still learning a lot of things into real estate. So there's always something to be learning about in terms of real estate. But along the way, I did make a couple mistakes, and I learned from those mistakes as well too. But one of the biggest struggles I did have it was analyzing some properties where I would spend like an hour, 2 hours just analyzing one property, and that's very common when anybody's jumping into like this business of real estate wholesaling because it is a business as well too. But I used to struggle with that, and again, it's just part of the process where again we all have to start somewhere. We all have to start with level zero and then make our way up from there. So with that being said, I actually created a couple things to help expedite the process of analyzing deals. And so I'm gonna show you guys a couple things that I've designed, and then it's available for you guys completely for free. Anyone who wants to take advantage of it before the end of the month, because after for the new month, after that it is all paid for. So take advantage as much as possible. But with that being said, let's just get started into it. So first thing is going to be there are a couple steps into the business of real estate wholesaling. I'm not sure if anybody knows all those steps, but if you don't, here are all the major steps of real estate wholesaling, where you got to find a property to you got to look for properties, you got to market to sellers, so that way you constantly are getting some properties into your pipeline. And then from there, so some of the owners are going to give you the information, and some of them you actually have to skip trace. Some of them you have to then after that you have to contact the seller or figure out what the motivation is, determine what the property's value, analyze the property while you're on the phone with the seller at times as well too, on the spot, negotiate with them because they're going to give you some objections. And then if everything happens to work very well, you get the property in the contract, then the rest of it, there's a few other steps that you definitely have to do. So there are quite a few steps. The major one that this whole series is about is the one that is highlighted, the estimated repairs and the maximum allowable offer that you have to bring in. Something that you do have to learn about real estate is adapting to changes. Real estate wholesaling is not just one exit strategy. There are so many numerous exit strategies nowadays that it's all about you learning and adapting to all those as quickly as possible before new strategies start coming out and new things. Because again, real estate, there's always laws changing in the game of real estate. And that is state by state, city by city, county by county. So that's the thing. It's you never know when things are going to be coming into place. But the only thing that you can do is adapt to all those changes as quickly as possible. So real estate wholesaling is one of many exit strategies, but it does open up the doors for you to that way whenever you want to transition into becoming your end buyer, then you will know all those strategies and you're able to work as many deals as possible to leverage you on your side from there. But with that being said, again, the main one that we're going to be focusing is the estimated repairs and the offers and how to negotiate those offers in today. Very first thing we have to learn about before getting those offers in, you do have to understand where the numbers come from. The number one thing that when it comes to looking into properties, it is going to be the after repair value or ARV, knowing how to find out what the property will be worth once it gets fully updated. This across the board, and when I mean across the board, I mean from wholesalers to real estate agents to buyers to investors to anyone who's looking to buy up any type of property out there. They always have to do their due diligence, and they're always going to find different resources and different information than everybody else. Everybody's going to have across the board different numbers. Sometimes there's going to be some parallel information, but majority of the time it's going to be very different across the board. Not only that, across the board, everybody's going to have different strategies across the board and different ways of calculating the numbers when it comes to analyzing deals. So as an example here, investor one, two, and three, as you guys can see, they're all going to be calculating things very differently. Even just little changes, maybe shifting one thing before the other, it makes like a difference in terms of those numbers. But when it comes to this business of wholesaling, it is going to be between investor one and two. That's going to be the most common ones. And of course, you're going to have like the weird investor that or end buyer that is going to be doing things very, very differently. But as you guys can see, ARV is the number one thing that we have to find out about a property. So that way we know what it can be worth or appraised for once it gets fully updated. Or if they want to do tiny touches or whatever it is that they want to do with the property, they want to find out what the property's value is. Because again, that's what the ARV stands for, is after repair. That also there's value into it. Next is going to be repairs. Understanding repairs. I don't dwell too much time on this. The way I analyze a property is I start listing down how many things it needs. If it needs one or two things, maybe three things, then I must stick this to on the light repairs, a type of category. If it's going to need five, six things, then I'm gonna put it in the average section of repairs. If I'm listing or I'm seeing like a stripped down to like just the wood, kind of like a brand new home that is getting remodeled by a construction company, then that's going to be a full gut job repair that is going to basically need everything completely changed. Or if it's a home that got burned down, not the entire home, but maybe like the roof, and then there's walls and there's all these things that got burned along the way. You basically have to take down everything, or you can even take it even further and completely demolish and start all over again. But again, it really depends on what anybody wants to do, because an end buyer can really spend the minimum, they can spend the maximum, and they can spend as much as they want actually, and then they can spend just around the average. These numbers right here are average nationwide. Some states like California, New York, even Texas, they're going to be the labor side is going to be a little bit more expensive, but all the other states it's going to be down to like the average. Again, I don't dwell too much in the repairs because again, the end buyer, I can tell them it needs $40,000, and then they're gonna end up hitting me like, oh, it doesn't need 40, it needs about $70,000. Well, I talked with the seller directly. This is what they told me. So if you want to spend $70,000, that is up to you. But if it doesn't make sense for you to buy my property at the asking price that I'm asking you, then this property is not for you. It's just best for you to look for something else, because it doesn't fit how it is that you're calculating your things. Because again, I have different buyers. All my buyers are going to be giving different feedback, and the one that's like, you know what, I'll take it as is, fine. I'll do the work. I'll even buy and hold. I'll do whatever it is that the end buyer wants to do. Let them do that to that. So don't dwell too much on repairs. Just start listing like a couple of things. Because light repairs, again, light repairs, consider it as a rental property that has got fully updated. It has laminated floors, kind of like those gray ones. There's like a color scheme of like gray and white, maybe black and white, or even like kind of like a green tonish and white going on type of scheme. There's always going to be like a scheme in those rentals. So that's what light repairs are. And then the rest is just you start listing more things into it, which we'll go through a couple of examples, a rental example and a fix and flip example as well too. So we'll do two live examples so that we can understand and see how I do some of the things, and then just start to take notes from there. Now, whenever we're looking at repairs of a property, we also you all have to analyze it based on what properties are finding other properties that are similar to it, or AKA comps. And whenever we're looking at comps or comparables, we do have to make sure that we stick within certain parameters when we're analyzing these. And then these parameters are based on what an appraiser will do whenever they're looking into into a property. So what they'll do is they're going to stick within a certain radius from the property. They're not going to be crossing major high traffic roads, or what they're called double yellow line roads. These double yellow line roads basically look like this. This is one of the streets here in Long Beach, California, where there's high traffic, buses, construction trucks, just high traffic in the morning when people are getting to work, high traffic in the afternoon when people are getting home from work. So these are double yellow line roads that an appraiser is not going to compare, even no matter how similar they are to each other. Even if it's like a twin home, they're not going to be pulling that property across the street over, just because they want to stick within the same neighborhood and the same area for the property. When it comes to like the living space, we are going to be looking at plus or minus 300 square feet. Lot size will vary on states and different cities. If you're looking at urban, you're not going to be looking more into urban cities. You're not going to be looking into square footage as much. If you're looking to suburban areas or even ranch style homes, then that's when you do have to consider lot size, because now you're measuring acres of a property. So that's when you do have to analyze more. But if you're looking just like in the city of LA, then definitely square footage is not going to be a major role, just because again, a majority of the cities are going to be playing just based on the living space. um, Another thing is make sure that you're comparing apples to apples, or aka compare the same property, the same year of the property, to another same year property that got fully updated. Don't compare a recently built 2024 home to a 1945 home, just because the materials and everything is going to be very, very differently. And then when you're analyzing for a lot of these deals, make sure that you're finding 3 to 5 comparables. Don't try to force a deal. Um, into the seller or whoever it is that you're talking to try to get a property. Don't If you find just one comp and then you try to negotiate based on just one comparable, and again, at the end, when you're trying to find an end buyer, they're gonna hit you with like, well, the max I can see this property is selling for is gonna be this price, which is gonna be way lower than what you're asking for, just because you found one comp and they only found maybe not zero comps, or maybe just that, yeah, a different comp than yours. So again, everybody's gonna be doing their due diligence, but make sure that you're finding at least 3 comps whenever you're analyzing, and then stick within the same neighborhood of that property. Now, the next thing I want to go over is definitely over some properties that could be a deal, cannot be a deal. So we're going to be doing let me close this out. So we're going to be looking for some properties that are on the market. Um, and then we're also going to be looking to see how we're going to be analyzing it with some of the resources that I was mentioning earlier. One of those resources is definitely going to be this calculator over here. If you guys head over to my website, eltonvargas.com, it's going to be the ARV calculator. You'll have access to the page, but before you get it, you actually have to head over to the calculators tab, and then head over to the bottom section and get the pro bundle. And then you're going to use coupon code not gatekeeping. I'm gonna put it on the chat for you guys. So that way, again, this is going to be expiring at the end of the month of this month, January 2024. So make sure you get it before the completely free version goes away. Otherwise, you have to pay the 50% discount from the calculators. So make sure you get that before then. But what I've designed over here is basically a process that is going to help you analyze the entire properties in less than a minute. It's all about, oh, you are going to take probably a couple of minutes to find some comps, but I'm gonna show you how to go through that. But basically, you're gonna be putting all the properties information from the asking price or the potential price that the seller is looking for, repairs, again, the repairs estimates, light repairs, average or gut job repairs, how much that the property will need to resell based on the information that you're getting, both from the either an agent or a seller, or based on the offer that you need to submit. the comps that we need to look for, and then how much your investors will end up buying that property for, and what kind of profit it is that they're looking from that deal. So we're gonna go through this together, but also there's a ARV, there's a video explaining the whole process, and then again, we're gonna go through this together. So I do have this spin the wheel game. Let me spin it real quick so that way I can do a random city. If you do have a property, by all means, put it in the chat. Or if you want to unmute yourself, you can definitely unmute yourself and we'll go through this together. But let's go through. I actually done set a rapid tile one in the past. Let me do a different one. Let's see. Hilo, Hawaii. Hawaii is very expensive right now, so well, that's the only thing. I'm looking for like a good market, and actually, I like this Gulfport, Mississippi. Gulfport, Mississippi. And you notice I was kind of picky, even though some of the states are listed into here, but it is what it is. Again, we're gonna go through here. Let me take off the border so that way I'm able to look beyond that. But basically right now, there's about 1,785 homes that are listed on Gulfport, Mississippi. What I'm looking for here is basically I'm looking for either a rental property or I'm looking for a property that could be a good fix and flip. So again, because there's two different calculators, there's the ARV calculator, and then there's a rental calculator as well too, which is going to look like this. So again, when you're analyzing, don't just think about wholesaling. Again, you got to think the strategy is what is going to be um, uh, the end strategy for your deal. You got to think as a buyer, put yourself in a buyer's position, and then start thinking like you're the actual buyer in the situation, and then how it is that you will do the numbers. So we're gonna do one of each, so that way you guys can see how it's gonna get done. And any questions, by all means, put it in the chat, or we can wait until the end uh, of the analysis. So let me look and set up some filters. I'm gonna set up two filters for single family and multifamily homes. Because again, I'm looking for fix and flips or buy and holds. I want to see. I'm looking for properties that have been sitting for more than 45 days. And then I'm looking for properties that are not new construction. I'm not looking for anything coming soon. And then I don't want any new construction homes either. So now it's giving me about 350 homes. So I have actually 302 homes. That's 302 opportunities that I'm looking for. I can even extend it to make it, sometimes sellers are more motivated when it's beyond 60 days. As you can see, it dropped from 300 to 262. So there's 262 homes that have been sitting in here in this market in Gulfport, Mississippi. I mean, is this Mississippi? I think this is Massachusetts. Oh no, that is Mississippi. Okay, cool. Just making sure. Awesome, awesome. All right. So we're gonna stick to here. All right, so we got around 260 homes. That's probably fine. So let me organize this by the lowest property on terms of like days. And let's check it out and see what it's looking like. So over here, we have a good example, a property that's definitely really outdated. Um, Definitely needs a good amount of work. So I'm gonna start listing the things. I can definitely see floors changing. Uh, if anything, if it's tile, because it's spread out throughout the entire house. So I gotta look at the pictures, but I definitely gotta um, change the paints. Uh, so paint, maybe flooring, maybe not. I'll definitely get rid of that. Lighting, change like some of the lighting into it. It's very dark. It's a lot of dark colors, so there's not a lot of light. Again, when you bring light colors, it's gonna make the home more roomy. Just like over here, automatically makes it, no matter how dark the furniture is, it's gonna make it more roomy. I don't know what this is. Maybe even put, I'm not sure if this is sectional, of just like the back porch. or if there's actual AC throughout the entire home, because I'm guessing Mississippi does get humid over there as well too. So not a lot of pictures, and I'm guessing this is the kitchen, so definitely update like the kitchen. So kitchen, paint, update like the appliances as well too. Didn't show the bathrooms, so I don't know what the condition of the bathrooms is for this property. But let's see what kind of description do we have going on so far. So $50,000 appraised below value. Don't wait. A true historical. Okay. A new roof put on December 21 and a new central air and heating system was installed in August. Okay, cool. So I don't, it's just part of the picture how it is. So new AC. Definitely do like the outside as well too. Get rid of um, those type of those kind of like window covers. I don't know what do you call them, but so it looks like the property appraised for 600,000 and then they listed for like $50,000 less. But another thing I want to check out is the price history. I want to see for it's been listed for 60 days, 59 days. It's been listed for 59 days and they haven't even done like a price drop whatsoever. So they appraised it at $600,000. That's what they listed it at back in November. And then right, it's been sitting around 549. There has been no action whatsoever. If I were and it is a big home, 2 bedroom, 1 bath. That's a big home for sure. And definitely it's really close to the water. There's like a boat port right over here. So that makes it really good. So this is gonna definitely gonna be like in a hot area. We got a school nearby. Um, we got a couple parks. It looks like we have a football stadium over here, maybe like a school stadium. Let's see what else. So far, really good, a really good area. So bay, it's clo really close to like the bay and the beach. So probably the home should be really good priced over here. But now let's um let's analyze it. Where's it at? I think it's right over here. Wait, no, where's it at? Let me see. Let me go back to this. Oh, it's on the other side. Oh, so this is a whole different area. So I'm seeing right here $1 million home, 2,500. So, but again, I gotta confirm the square footage because 2013. And then let me do a street viewer as well too. I want to make sure I'm looking at other properties that may be or have been fully updated as well too. Um, what is this, like a museum? Or is this a home? Is it homes are in Mississippi? Just very high spaced. Man, these are like giant places. Okay, so we have kind of like an abandoned home right over here. And this is the thing I like about Street Viewer is um I like to sometimes it will show you right up here when it doesn't show it right now. But that's the thing. Sometimes whenever you're looking at one property, if you do Street View, you can kind of do like driving for dollars virtually, and this how you can find other properties as well too. Because this looks like another home that just needs work, but I don't know if that's like a shed part of this home. Oh no, that's a home right there. So two homes split up right here, and it looks like everybody has boats. So again, really good neighborhood. So I'm liking that so far. So then now let me put in information. So they're selling the home for 549. This is going to be part of the ARV calculator. It's listed with an agent. Um, I gotta find out if there's any mortgage on the property, so I'll find out that. We have a 2013 square foot home. There's no basement here in Mississippi, I believe. I can find out through here, through the details. Let's see if it's like a crawl space, square foot source appraiser. So again, because they appraised it, roof, shingle, exterior, foundation, chain wall. Okay, so no basement on this property. That's perfectly fine. So zero in the basement. So again, based on the repairs, so based on the pictures I was listing, I don't know about the bathroom. I'm guessing the bathroom is definitely gonna need some work as well too. But kitchen, may have floors, paint, remove like all that wood, lighting. I don't have to do the roof, even better. Um, get rid of that carpet, change some of the doors, possibly as well too. The windows look really new, so that's perfectly fine. Again, appliances. So I'm gonna put this really kind of in. So average repairs range from $25 a square foot to 40. So this is average repairs. So I'm gonna put it close to like $30 a square foot because it is a big home. So it's gonna need roughly around $60,000 and $349 in repairs. Let's say I'm the investor, I'm the buyer, that because I'm putting myself into that place. Then let's say I want to make a 15% profit out of the deal. Um, then this property is listed at 549. Then I need to sell the property for based on what the agent is telling me is the property is listed at 550. I need to put $60,000 in repairs and I want to make 15% in profit. That means I need to sell my property or resell my property for $765,000. If that's not the case, and maybe I need to select this wholesale or I even put myself as a fix and flipper, the most I'll buy the property for is 384,930. If I were to buy at that price, sell it for do the upgrades for $60,000, also pay the closing costs for both myself and the seller to get maybe even get like a lower price, then I need to sell my property for $556,384. Or yeah, basically 556,400. So now this is basically the ARVs I need to find and then possibly this determine how it goes over here. So I got to look for some comps. So that's what I'm going to do now. And then let me look at comps. When I'm looking at comps, I'm looking for comps that have sold in the last 6 to 9 months. Again, I'm sticking within the area. Definitely going to be within a half mile to 1 mile radius. So there's I gotta check out these streets because again, part of the street viewer, I gotta know which is the main street that leads into the downtown area. So I gotta find out where the high traffic is. So even though this is Main Street, it looks like Main Street is a main road, but not too busy. Let's see. Is it State? One of these streets has to be like that. No, not straight. I think it's definitely gonna be like Main Street, grocery store, maybe a gas station as well too. So I think it's definitely gonna be Main Street. Um, Let me check out Carroll. Where's Carroll Avenue? It's right here. So it's kind of like behind the property. Carroll, same thing. So I think it's Main Street. So I just want to draw like a line maybe around Main Street because Main Street is going to be kind of like that main road. So I'm going to use this button right over here on Redfin that lets me draw kind of like a circle. So that way I can stick to the neighborhood that I'm looking for. So this is going to be kind of like my neighborhood or my area. So this is where I got to find some comparables. My property is right here on Carroll Street. It's on Allman. It's on Allman, but it's between Allman and Carroll, so right over here. So now let me start changing some of these filters because I have multifamily. And this property, it's a single family home, not a duplex, right? Yep. So it's a single family home. Um, then I gotta go plus or minus 300 square feet, so 1,700 and up to I gotta select 2,500, I guess. So I got about it gave about 7 comps, possible comps. That's the thing I gotta find out which one is the best one. So I'm gonna categorize them by the highest square foot price per square foot. The reason why is because I'm looking for properties that maybe got that recently got fully updated. And again, the value of that property is definitely going to be higher. And then, of course, it's going to tell me what the sale price is. So this sold in September of last year. It is a 2023 built. My property I'm looking for is a 1920s home. So this 2023 built is not going to work because, again, I need to compare apples to apples. We have a 2018 home, 2004, 2000, 2023 home, 2008, and then 1905 home. This 1905 home, so you can see this is kind of like what I'm looking for. This sold in December 8th. So December 8th is when this property sold and it looks in better condition than my property, as well too. Just more recently up, it has better updates. That's what I'm trying to say. It has better updates, and it's a 2 bedroom, 2 bath property. So I will use this property as my comp. $400,000, 205 sold in December. That's really good. Um, this one, 2008. And again, that's a 1905 property as well too. 1905. Um, then again, we have this 2023 home. So you can see this what's there. I mean, it's good news that there's new construction happening. This is a 1830 3-2 property. Sold for 273, but again, that's a 2023 home. Um, Same thing with this. That's a newer home, 2000, 2004. So that's the thing is I use my comps that are close to the date, or I gotta find properties that sold for that are fully updated and just go based on the 2023 comps. There is one comp. So far this is kind of like a red flag to me where I can't really analyze it because again, we only have one subject property, and not even that subject property is not even plus or minus 10 years, is close to like 15 years of a difference. So that's really kind of outside of the jurisdiction of sticking to the same years, no matter how much I want to use it. Again, no matter how much you want to use the 2023 comps, that's the thing about it is I gotta stick to the apples to apples. I can't, and even these apples 2023 builds, they're not this is a 2 level one, and then this is a 1 level home. And then the home that we're looking is just a 1 level home as well too. So that's why I can't use this $800,000 home. So if this it's $800,000 for 2 levels, then just one home is that the average should be selling between 400 to $500,000, fully updated ones as well too. So honestly, this is an example of a no deal property whatsoever, just because I'm not gonna force the deals here whatsoever. I'm truly not. Even if I were to use this 1905 one, the most recent one, let me average it out and just put average price per square foot at 205. So I'll put 205 across the board. And basically it's going to tell me how much this property can sell for. And bam, that will be my ARV. That will be how much my property recently sold for, fully updated type of property. Um, Even if the appraisal, $50,000 below the appraisal, it's how come that it appraised for that much when I'm finding another property that it's in way better condition and it sold for $400,000. So either that appraisal just it came out bad, or I don't know what it is that they were looking at. But again, everybody's going to be having different information from here. And based on that ARV, if I have to play with that ARV, I'll need to buy the property. This is how much I will get the property under contract for. Me as an end buyer. Then of course, if I want to wholesale, I need to add my wholesale fee into this. So if I want to make $10,000, $20,000, then I gotta subtract 10 or $20,000 from here from my offer. But again, so far I only found one comp, and again, this is an example of that just one comp doesn't always do it. From time to time, you might be able to get away, or sometimes I would just have to ask the agent, like, "Hey, what kind of what's the area like? What would the property appraise for once it gets fully updated? Because this property needs work. It definitely needs work. It doesn't look like it was somebody who who took the time to update the roof, someone who updated the central air. So they try to basically either the agent or maybe the seller did it prior to selling the home, where they put like a few extra incentives so that way they can value the property's value from there. And that can definitely happen. So it's just a matter of who is willing to spend that money. But yeah, I would just move on from this deal, but I'll definitely get in touch with the agent and figure out like, hey, what kind of comps you pulling, and then play based on those comps and just go from there. Seeing if they're comparing apples to apples or if they're playing the game of like um comparing 2023 to a 1920 home. So that's the thing I gotta get in touch with base with. So that was a fix and flip example. So again, now that's the way you would analyze like the property. Those are my steps for it. Now let's look for a property that could become a good rental property. But again, our city was what's over here was Gulfport. So let me look for a multi-family home because again, I want to use the example of the other one. And let me see how many multi-family homes I can look. So as a multi-family home, you'll be more of a numbers. So that's where we're going to go through the numbers. That way you guys can see how the calculator is going to help you out in terms of like analyzing the numbers. And then if I were to do this quietly, I'm in my own zone. I would put these numbers stupid quickly, but for training purposes, I'm gonna go through the entire process so that way you guys can understand how is it gonna go from here. One thing I'm looking for is making sure because these properties are listed with an agent. I'm looking for properties that oh, let me change the square footage for sure. I'm looking for properties that have like the rental information because that's what I'm basing it off on the information that it's available. And then definitely let me look for properties I've been sitting for quite a little bit. Because if they're sitting for a while, there's probably something going on. And of course, at all times, I'm looking for the history of it, make sure that it got on the contract in the past. Because if it got on the contract, like what was it that happened as well too. So then for this example, uh, if they don't provide you the property, I mean the rental, what I always like to do is I like to use Zumper. So Zumper, type in Sumper, Gulfport, Massachusetts, and it will show you houses for renting, houses for it, or average rent in Gulfport, Massachusetts. And right here, let's say we're looking at this one, we're looking at what is this? So this complex consists of 4 units. So we got a quad, each occupied by long-term tenants, ensuring a steady and reliable income stream. Don't miss a chance by acquiring a property that combines financial security and lasting tenant buyer and buyer usages to verify all information. So that's the thing. We definitely have to verify all the information, find out how much all those long-term tenants are paying and what's actually happening, and then make sure that they're up to par. Um, if it's 4 units and it's a 4 bedroom, 4 bath, it's gonna be a 1 bedroom, 1 bath. So let me look for let's see. So 1 bedroom, 1 bedroom, 1 bath, and the median rent for 1 bedroom, 1 bath homes is what if I change it to 2 bedroom? And let's change apartment. Just trying to see. So the median rent, it doesn't let me go by. I don't know why it's not changing. Oh, here we go. So it's 850. I was like, why is it not changing? It's 850 per unit. So that's how much it will be for this apartment. So this is the way it will put in. We will put in the numbers. So they're asking 250. So $250,000. Let's say I need to get a loan. I'll put 20%. I'm gonna go with like 7.5% interest on this property, 30 years. My down payment is gonna be $50,000. My monthly payment, which is principal and interest is going to be basically $1,400. My closing costs is going to be 12,500. So my initial investment, and that's the thing, I don't even know what the properties, if the units need updates as well too. So that's another thing I do have to consider how much, if I need to make maybe 10, 15, $20,000 in investment, or leave it as is and let the tenants, the long-term tenants, still be in there, or maybe try to negotiate to definitely try to negotiate on in terms of, let's select all types. Try to negotiate with the tenants and see if I can raise up like the rent, maybe to like 900. Because I see like most of the homes are like between 900 to like 1,200, so maybe like 1,100 in terms of like the rental. So then I'm gonna put in the numbers over here. Um, oh, they're all one bedroom, one bath, so it's 4 units. They're all, if I can rent all of them for 900, that'll definitely be great. So it's gonna bring me around $3,600 in monthly income, times 12 months. I gotta check out if there's other garages, if there's anything else that can bring me money into the property. So I gotta figure out if there's any other expenses, laundry or just something else. Uh, Looks like there's secure parking. There's even extra parking as well too. Um, so maybe this can honestly can be converted if this could be the parking space already. And also this property is listed on a busy road. I can see one, two, three, four, five. There's a semi truck happening back there as well too, plus 5 cars. So it is in a busy area. But honestly, if it's doable, make this other lot and convert it to 4 other units. It is going to take extra money to build those 4 units, but it's definitely going to bring more value into the property. Spend like 200,000, maybe $350,000 on bringing an extra unit, and then just collect extra income into it. But that's honestly something else that'll definitely want to come into place. So any extra income like a garage, laundry, just any extra income that can bring overall, that's what I'm trying to do and then think for it. I like to stick to my expenses at 40% rule. If I were to manage the property myself, then if I were to live in the area, manage it myself, then and possibly even live in one of the properties, then my expenses should be 30%, but I might average it out and then stick to my average of 40%. I can break down the expenses from like taxes, insurance, maintenance, all of that, but I'm gonna stick to my 40% rule just in case there's extra room in there. So then now my net operating income after all my expenses is going to be $25,000. From here, I do need to deduct my mortgage or AKA debt service. My debt service is going to be $16,000 for it. So then my property is going to be cash flowing around 9,138, which for this property, it's really amazing so far. Again, if I can bring my expenses down, by all means, I'll definitely do so. But for the asking price and then how much money it's bringing already, hopefully they're not being under rented like around $600, $700, because again, this is telling me uh, about what is this 30 35 34% of these properties in Gulfport, Massachusetts do range between 500 to like barely $900. So I got to make sure that these properties are not really under rented, and just trying to bring it up to like 900, try to get like the most out of it. If they again, maybe even work with the tenants and then figure out how much they could rent it out, because prices of rent can always go up. But if I were to get a $900, I'll basically buy it at a 10% cap rate. My cash flow is $9,000 a year, 14.62 cash on cash return. I'll break even for my initial investment in 82 months. But let's say I'm able to negotiate with the seller and try to get it start get negotiations are like around 15% of the cap rate, because the higher the cap rate on a property you buy, on a rental property you buy, the less you're buying it for. The lower the cap rate, that means you start the property is going to be more at risk because now you're paying more for it, and it really depends on how much it's bringing. But so far, this property is already at a 10% cap rate, so I'm just trying to negotiate. I'll start even at 16%, make my way down to like 14, and then possibly even try to buy it around 12% cap rate. Because if I were to buy around $216,000, again, all my numbers are gonna drop from here. My down payment is gonna drop, my closing costs is gonna drop, my monthly payment is gonna drop a little bit, but again, my cash flow stays the same. And then my expenses, again, are gonna drop a little bit as well too. Then now I bought it at 12% cap rate, and I just raised up another $2,000 into my cash flow. So now my break even, my debt service or AKA mortgage is going to drop from there. But it basically gives me the whole breakdown of if it's a good deal or not deal. And it really comes down like what the other properties are selling for, other rentals, what the cap rate is for other rentals, and then seeing like what the area is and understand how much I can get for it. But again, part of the deal and any real estate deal, it's all about negotiations. So I'll definitely want to start as high as possible, so that way I can buy it as low as possible, because again, it is going to need some work as well too. So if anything, if I can get it for 14% cap rate just because of the extra repairs it needs, and also possibly think future wise and then close that parking lot area, because there's a good amount of parking space right over here. It's uh build another 4 units on the other side, and then bam, maybe even get rid of the shed and then build like a shed for like laundry, and then I have laundry income coming in through as well too. But another reason I want to get the property at a low price is because it is on a high traffic area. I can see a huge semi truck coming down this road, and especially with these electrical lines and high traffic, just anything can really happen. And again, for my safety and the safety of my tenants, I want to make sure I get like a discount of it. Automatically, it'll be a 10% discount, just from being on a high traffic area. So if they're selling for $250,000 minus 10%, because it's in front of a high traffic area, then I'm already able to get like $225,000 for the asking price. And then from there I just negotiate more, and then just try to get it between like uh 190 to like 210, like the most. And that will put me on what, 210 at that 12% mark, like 13% then, a little bit lower than that. So again, I'm just trying to work like a deal out of it and seeing what's the best that I can get. But I'll definitely want to start a little bit higher and then just negotiate from there. But so far, again, if I'm able to get it at least even just 210, again, it's already producing me income. So the expenses are going to be dropping. So the property is already cash flowing phenomenally from this. So this will be a great property to like invest to. And then there's already long-term tenants. So it's even better. Maybe not even worry about them, just worry about the building like the other side and just work from there. So honestly, it's a great deal so far on how it is, but I gotta confirm all the information, seeing what kind of expenses are actually happening, see what the income that is bringing from the tenants. Hopefully, it's not close to like that 600, maybe $700 in rent. Again, if not, then we got to bring the rent up higher from there. But those are the two examples of how to use the rental calculator to like analyze rentals if you're looking for an end buyer that's looking for rentals, or the ARV if you're just looking for like fix and flip and wholesaling deals from here. But any questions you guys have, you can always reach out to me on one-on-one sessions, and head over to the real estate education side, because on the educational side, there's the previous live Zooms, and there's also files like agreements, purchase and sale agreements, um, cold calling scripts, and resources. So there's all this stuff available for you guys. Or if you want to take some quizzes or find out how to find buyers, there's some blogs as well too. But the most important, it is the calculators, because it helps you expedite like on your deals. But any other questions you guys have, just reach out to me on the one-on-one sessions from there, and just book it so that way I can help you one-on-one or help you guys started into like real estate, whatever it is that you need help with, and we'll just go from there.